go to. That's the most likely scenario. So in that particular situation, it's not surprising that the bets on a 50 basis point cut have proved so resilient, because if the Fed is facing a situation where it needs to make deeper cuts at some stage, the logic of the way monetary policy works, the whole context should be they would go 50. No question at all. If you think you're going to have to go 50, go now rather than wait. That would be the marching orders. So that's kind of what markets are assuming, which actually means the biggest risk might not be what the Fed actually does today, whether it's 25 or 50, but what the dot plots show, how shallow those are relative to those expectations. Because you could get a situation where the Fed says, okay, we're going to cut 50 basis points, but then we're going to say we're going to cut 25 a meeting, or maybe even 25 a meeting at most. So we're going to have a dot plot that shows a fairly shallow move from here. If that was the situation, that might actually cause markets more disruption than a 25 basis point one, where they just be able to go, well, the Fed's out of its mind if it thinks it can get away with just cutting by 25 basis points. It's going to have to cut by a lot, never mind the dot plot, so we're going to stick to our knitting.
What could really lead to more disruption coming from the Japanese yen or the unwind of yen carry trades at this point?
Well, I mean, yeah, there's two risks there. One is that if the Fed does, deliver a 50 basis point cut and a fairly, if it sort of meets those expectations that are there in the swaps curve, then you could see the yen, power ahead. We saw a pullback in the yen yesterday. That was to some extent an acknowledgement that the data continues to remain resilient for the US economy. Treasury yields ticked up, so the dollar came back against the yen. Now, it might also mostly been about position squaring, because this is a big event risk. You don't want to get too over your skis, but it does underscore the potential that a more dovish than what you might call the whisper number Fed, that would send the yen through that 140 level. There's also the potential that even if the Fed doesn't send it through there, the BOJ does, because although the BOJ is fully expected to leave rates where they are at this meeting, again, the risk is in the outlook. And if you remember, last time around, the initial decision from the BOJ, which was to hike rates, didn't set off huge yen gains. The yen gains really kicked off once Ueda came out and made it clear they were willing to go on hiking rates, provided just that the Japanese economy met expectations, not exceeded, but met expectations. So he put us all on a pretty solid track towards BOJ rate hikes. If that track remains solid, if it remains the case that the BOJ is likely to exceed what the market is pricing for moves in the coming months, that could send the yen down through 140, and that's going to cause a lot of pain for, it's not just the straight carry trades, it's the general setup. There are a lot of investors, both Japanese and otherwise, who are essentially structurally short yen, and if they do have to unwind those shorts on the yen, if they have to buy the yen, that is going to cause a lot of pain across a wide range of assets, not just the occasional hedge fund that got caught out by a momentum trade.
The pager attack in Lebanon is sort of, perhaps a pertinent reminder that even as markets remain pretty sanguine about geopolitical risk, it's always there in the background.
Yeah, very much so. That's something that's on our radar. Keeping an eye on where Brent goes today is definitely a good idea. It's an interesting one in that the overall outlook for crude oil is not good. The demand side and the supply side as well, because the US and other non-OPEC producers keep on boosting output. So oil, it is not about to go sustainably back significantly higher from here, probably, even if there is, well, maybe unless there is a really big conflagration in the Middle East, something that it looks like there's not a lot of appetite for, but it's going to remain, a warning sign. It's going to remain the sort of thing that is going to drive people towards the Swiss franc, also potentially towards the yen. It's going to act as a cloud for treasuries, because on the one hand, they're a haven asset. On the other hand, higher oil prices, even a short-term leap in oil prices, it has tended to hurt them because of inflation concerns. It's also going to be very interesting from the point of view of the impact on gold. Might muddy the picture a bit too, because for gold, that's one of the things we're really looking at going into and out of the Fed meeting. There's this concern that the importance with the Fed meeting is what's the messaging and whether they can convince people that a soft landing remains on track. If you get gold jumping up, say, past $2,600 per ounce, that's your sign that the markets are pricing for a recession.
Garfield Reynolds, who leads the market's live coverage in Asia, there with his take on all of the market moves we should be expecting this week. But take a look at some of the early movers, especially in the Japanese session. Nippon Steel is the one that we're watching because Bloomberg has learned that the company will receive an extension in the security review over its $14 billion deal for U.S. Steel. Now, of course, this has been a political flashpoint in the U.S. election, right? And the move technically allows the company to revoke and refile its submission to a security review panel, and this would restart the clock and potentially push it to after the U.S. election. Right now, we're seeing the share gain by the most in more than a week. We're also watching some defense stocks as well across Asia. North Korea fired at least 2 suspected ballistic missiles in what would be their second barrage this month. The projectiles were launched early Wednesday and have likely already fallen outside of Japan's exclusive economic zone, according to Japan's Coast Guard. And also this comes after North Korea this week sent its foreign minister to Russia. Let's get back to the Token 2049 crypto conference in Singapore. Our tech reporter Annabelle Jewelers is still there. Belle.
Thanks, Jerry. Well, I hope you can take that sound as a symbol rather of the energy and enthusiasm at the event today. But Token 2049 is a global cryptocurrency conference bringing together some of the biggest names, the biggest businesses in this region or in this industry. And later this hour, we'll be speaking about the venture capital industry with Dragonfly, a pretty well-known name in the space, talking about that gradual recovery we're seeing. Is that genuine evolution, or is it being driven by FOMO instead? So an interview to watch out for this hour, and later ahead as well, speaking with the founder of Cardano, one of the big tokens in crypto. But that's it for Token 2049, kicking off for another year.
Annabelle Jewelers there in Singapore. Coming up next, we'll also be live also in Singapore for the Milk in Asia Summit. A conversation ahead with Ray Dalio for his views on the U.S. presidential race and the state of the U.S. economy ahead of a likely Fed rate cut. This is Bloomberg.
AI, how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea, but ultimately you still have to do a lot of it. They just give you very superficial ideas, and but at the end you still have to customize and have to really make it and do that. I do not think that AI and the technology can